right, joining us now is FundStrat's head of research, CNBC contributor Tom Lee, also the chairman of BitMine Immersion Technologies, an Ether treasury company. All right, so Tom, you've heard what Steve had to say. This is, by the way, not unusual for NVIDIA, is it? NVIDIA, the good folks at Bespoke, your team, you've recognized that NVIDIA will often have these kind of wild swings following earnings, but what is your take right now on these markets?
Well, I think I'm going to kind of add to what Steve said. You know, I think the crypto market has been limping along since October 10th, because on that date was a negative shock. I mean, today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, Brian, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. I mean, they act almost as the central bank in crypto. And if they've got a hole in their balance sheet that they need to raise capital for, they need to reflexively reduce their balance sheet, reduce trading, and if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. And so in 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. So I kind of concur. I think crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity.
Well, that was the point that my very, very smart team behind me, we put together for the top of the show, which was showing that Bitcoin turned down today before the market did. All right, take us back. So October 6th, I think it was October 6th or 7th, Bitcoin hit 125,000. Yeah, a couple days later, it was still around 120,000. Now, obviously, Bitcoin's at 86 and change. So what specifically occurred on or around October 10th that would lead us to where we are now on what, November 20th?
Yeah. Well, Steve actually pointed this out. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. It actually, stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade. Almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
So who is behind this? Like, who's the they in the market makers and they got hit? Who's the they?
Well, you know, Brian, I am aware of names, but because you know, I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, you know, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I want to go back to this point, Tom. I hate the term glitch. I can't stand the term glitch because, you know, things go down at the airport and they say, well, a glitch clause, your flight did not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this? I'm trying to follow exactly what you're hinting around about.
Yeah, I mean, Brian, it is. I mean, for instance, in 1987, portfolio insurance was the, quote, glitch, and that triggered the cascade in 1987. And so the industry learned and then never offered that again. You know, in 2009, it was really the the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and like overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is not kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage in crypto. But
you
Tom
implied
DeMark,
it in 2022. In 2022, we had what you would call a 6-week washout, maybe because of this, again, not using the word glitch, this software or coding problem or mistake. 6 weeks later, we know what happened. If you bought then, you made a lot of money. Do you still think we are in a washout period in an overall bull market?
Yeah, I mean, I can tell you a few things. Whether we're talking to macro funds or to crypto funds, they are sitting on piles of cash. People are sitting on their hands because they know there are these plumbing problems and these crippled market makers. They're not going to try to be heroes and step in here. So when we look at those prior corrections, even Bitcoin in the last few years, Bitcoin last year had some really ugly corrections. Each of them had the recovery, right? The rise from the low was faster than the drip to the bottom. So if we've been suffering through 6 weeks of Bitcoin falling from 125 to 88, and maybe it goes to 77, right? Maybe that's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks that
This
are the
reminds,
proxy.
okay,
So that's the MicroStrategies.
This is one of, if not the most important interviews I've done this year. And that's respectfully to every other guest we've had on this fine network and fine show. Because I want to dive in a little bit deeper to what you're saying. That basically there's some kind of a software coding problem that's causing a lot of this. Let's bring up, guys, if we can, MSTR. That is the company formerly known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs in the middle of July. Is MicroStrategy down because Bitcoin is down, or is Bitcoin falling in part because the strategies of the world, the Michael Saylors of the world, have to sell the crypto because their equity is going down? What's the chicken? What's the egg?
Yeah. Well, again, because of my world in research and on BitMine, we are really plugged into all the trading desks and all the clients that trade. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives, like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect their Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts. That's what we're seeing today.
This is the kind of stuff, Tom, it's one of the main reasons that we bring you on, because you understand what I would consider the engine oil of the stock market, right? We know how the engine works, or people think they do, but inside that engine, there are gears, there are pistons, there are things that are occurring that for 99.9% of our audience, they don't do this for a living. We get it. This is a really important interview. I'm going to let you go, Tom. We are watching MicroStrategy or Strategy, we're watching Bitcoin, and we're watching possibly 77,000, which you think might be kind of a washout period, correct?
Yeah, that's right. Tom DeMark, who is an advisor to BitMine,
very well known
really
to me,
giving us a lot of insights. Yeah, he's watching that. Actually, MicroStrategy at this level here probably is when you want to ratchet into the longs, and Bitcoin maybe just a few $1,000s lower.
So we might be at a bottom for Strategy.
Yeah.
Looking at maybe the DeMark indicators named after Mr. Tom DeMark. It's a technical indicator watched by a lot of hitters on Wall Street. Tom Lee of Fundstrat, appreciate your time. Really super smart interview. As always, Tom, have a great day. Thank you.
Thank you.
All right, out of stocks for a bit. Let's go now to the bond market because Treasury yields, as you might imagine, on a day like today, they are responding as well. They're not falling as much as Rick Santelli we might think, though. When I see a market reversal of this magnitude, maybe I think the bonds get bought a lot more and we see a yield right under 4%. Not the case today.
No, and I think that you've nailed one of the reasons why. And I think portfolio insurance that was referenced by Mr. Lee in the old days, well, think about it this way. If it isn't really the economy that's driving stock prices lower on a day like today, maybe that explains why Treasury yields aren't paying as much attention. That relationship of nasty moves in stocks usually translates into buying in Treasuries. And even though there is some, you're exactly right. There doesn't seem to be what many would have guessed would have showed up on a day like today. Let's go quickly and look at the dynamics. 119,000 jobs you see on that bar chart. You know, we turned the corner to some extent. And that was the good news, but it was a mixed bag. 4.4% unemployment rate, that's a 4-year high, as you see on the next chart. If you look at 2s and 10s, we made the high yield basically right on the number, and that's the top of the closing range for November, basically, for 10-year, right around that 415 to 417 area, and we held the bottom of that closing range right around 408-ish. We're hovering at 410, not huge moves. Finally, what has been moving wildly today are probabilities for the rate cut in December. It was as low as 24%, as high as 41%. That was today. It's certainly sitting now at 36%. That chart you see, well, yesterday we went down. That knocked the percentages lower. Today, with the market's moves, we see it coming back a bit up. That price is in a little bit more cut. So 24 to 36%, still well under 50. Brian? Back to you.
Quickly, though, Rick, you're a markets guy, bond guy, but what did you make of what Tom Lee had to say? I thought that was an incredibly interesting interview because we're talking about these software problems and forced liquidity and hedging against it. I mean, you're a markets guy. That was kind of a rare peek inside the engine, I think.
Yeah, the only thing I'm not sure that I agree with is it's not a glitch. It's the way the markets are and the programs are created. Now, just like portfolio insurance, it wasn't a mistake. It just wasn't the most efficient way to accomplish the goal. And just like the leverage in that system that Mr. Lee was pointing to, in the end, they will find ways. But you always have to protect the holders, the FCMs, and all the people in this equation that take the risk when value of something used as collateral diminishes in a fast way.
Yeah, and it wasn't just portfolio insurance in 1987. It also reminded me of 2007 and early 2008 when the people they were the ones you could push around, got pushed around, and started things selling. Rick Santelli, thank you very much.
Welcome to the Halftime Report. I am Frank Holland in for Scott Wapner. Front and center at this hour, the big reversal. Stocks at session lows as NVIDIA gives up its post-earnings pop. So what's driving this rollover? Our investment committee standing by to debate that and much, much more. Joining me for the hour, we have Joe Terranova, Stephanie Link, and Bryn Talkington. Before we get this conversation started, quick check on the market. As Carl just noted, we're in the red across the board right now, again, at session lows. The S&P pulling back just about 0.25%. The NASDAQ pulling back about 1/3. Even the Russell's in the red right now. The Dow pulling back just about 45 points. But remember, we were in rally mode earlier today, and that's where I'm coming to you, Joe. What's going on? I think everybody's trying to figure out what's going on after that great NVIDIA report that made every index pop, and now we're giving up all those gains.
Look, it's frustrating to have to come on air and share with the viewers what is actually right now unfolding. And it really relates to cryptocurrencies and the continued decline that we're seeing there. Ethereum, Bitcoin, they both rolled over in the middle of the day, took the market down, the equities market down with the crypto market. You're now staring at greater than 20% losses on the quarter for each of these. Why is this happening? Because this is an example of where we have been in the last several days, where investors and speculators want to take risk off the table. And that's the environment, that's the sentiment, that's the tone. And to see the reversal that we're seeing in equities with NVIDIA, I don't think it's endemic of there's something wrong with equities, okay? Extreme valuation equities, we saw what the market did to Palantir post-earnings, good earnings, bad price reaction. The market right now wants to invest, wants to allocate towards the AI theme, but it wants to do it with the quality names. NVIDIA is a quality name. So I don't think this is endemic of something troubling with NVIDIA. I think this is more about sentiment in the market in an environment where speculators want to take the risk off. And that one area that I continue to be focused on is cryptocurrencies, because that's where the leverage is. And excessive leverage, Frank, is always the troubling spot in the market.
Just to illustrate your point, by the way, Bitcoin back below 90,000. Earlier this morning, I believe it was about 91,000, Steph. Yep. So a big decline there. I'm looking at Ether in the red, too. And I want to kind of jump off of Joe's point right here. He says the market likes quality, even if it's high valuation. I'm looking at Palantir. I do think that's a quality name. That's down more than 2.5%. Vertiv, almost down 3%. So, Joe, to your point, I know you said it's a lot of margin calling, and people sometimes they have to sell their equities to pay off their crypto losses. But why do you think these names in particular are so hard hit? Because after that NVIDIA report, it seems like their businesses are solidified, and some of these fears have been eased, at least for today, where we thought they were.
There's absolutely nothing wrong with NVIDIA. I don't own it, but I tell you, the growth is phenomenal. Total revenue growth of 63%. Data revenue growth 66%. Guidance is in the 60s as well. There's absolutely nothing wrong with NVIDIA. The problem is it's 7% of the S&P 500, very, very overowned, very well liked by the sell side as well. There's like 100% of the analysts have buys on this thing. So it is very overowned. I'm actually intrigued that Broadcom has actually acted better today, because I think it's a little less overowned, but it's still there. It's still very popular. But the issue is it's the food chain. So NVIDIA obviously is the AI play, the pure play, and the technology side. So is Broadcom. So are a lot of technology names. But then you go and you look at data centers and the industrials that build out the data centers. They're getting hit. They reversed as well. So did the grid players, the utility players, and now the power companies, independent power producers are all down. They've all reversed as well. So it's like this knock-on effect. And I don't think it's the right action, to be honest with you. If it's because of Bitcoin and people are taking risks down, go to these quality companies that are not reacting to where numbers are going up substantially, where there's substantial buybacks and increasing of dividends, and the total addressable market is substantial as well. So I think you want to pick and choose. Do you want to do it today? I don't like the action at all, but I do think you want to pick and choose some of these companies. Every one of the names that you just mentioned, I think are buys here.
Ray, I want to come over to you. We often go to you when we talk about cryptocurrency, specifically Bitcoin, because you've been an IBIT holder. What do you make of the action going on here? And I do want to point out the IBIT, the iShares Bitcoin ETFs, actually trading a bit lower than the coin itself. Your view on cryptocurrency and just holding it right now. I mean, it's so volatile right now. You're seeing these big declines, and it seems to hit an area of resistance right around maybe 92, 93, and it just can't seem to break past that anymore.
Yeah, well, I want to go back to what Joe was saying, which I think is very important about the delevering in the system. So where do a lot of institutions and specifically hedge funds lever up? Well, number one, they access the repo market, which has been very wonky lately. But more important, the yen, long, borrow in yen, go and buy risky assets. I mean, the 10-year JGBs have gone from 1% this year to 175. So on a percentage basis, it's a massive move. And so I think you have this delevering in crypto. I think you have some hedge funds and institutions that are offside in this yen, borrowing yen. And so you have this liquidity sucking out of the market. And I feel like with Bitcoin, as liquidity comes out, Bitcoin gets hit with the bid, or crypto in general. And so to me, until we get this stabilization in the liquidity, and I think crypto will be the first sign of that, I feel that the market as a whole is saying there's something else happening. Because to Steph's point, I mean, NVIDIA's numbers were great. Okay, they were great, period and stop. Why hasn't that been able to carry the market even higher? I do think there's other things at play that we as investors are hard to see, and I think this delevering in the yen and also in the wonkiness of the reverse repo market is adding to this negative sentiment across the market.
So, Joe, I want to come back over to you. Right now, we're looking at NVIDIA trading lower, and this is a question I've been asking since about 5 o'clock this morning. After this great report, do you buy more NVIDIA here? And now that it's pulled back about 0.5%, 2/3% based on the moves right there, is this a buyable place for NVIDIA after that really strong earnings report that showed, at least for the near term, we're not in a bubble? Can you buy here on this very slight dip for NVIDIA or any of these other names on this dip?
As I grow older, I become more and more confident that you have to have a process. And my process is becoming more and more rules-based because I think market structure dictates that. And I think you need to have discipline in a certain regard. I said to Scott several weeks ago, I would not, if you didn't own NVIDIA, I wouldn't be reaching for NVIDIA when it was 195-ish. If you were long, I would maintain your position. I would have rather have bought NVIDIA on a breakout above that new all-time high, which it did not achieve after reporting earnings last night and subsequent price action this morning. So I think I want to maintain that discipline. To answer your question succinctly, if you don't own NVIDIA, no, I don't think I would be buying NVIDIA exactly right here. I'd rather see some strength reflected with a breakout above a new all-time high. There's your confirmation, and if you don't own it, I would rather buy it there.
Yeah, by the way, JP Morgan out with a note today saying that retail investors, they bought NVIDIA every day this week going into earnings. There's a lot of confidence by the retail investors.
They sold it last night.
Steph, similar question to you. Let's go beyond NVIDIA, some of these other second derivative plays. It sounded like you would say you would buy Palantir on this pullback, or a Vertiv or an Eaton on these pullbacks.
Well, Vertiv, Eaton, Quanta Services, GE Vernova, Rockwell Automation, all of them. I own all of them. I like all of them very much. You know, Vertiv was my choice on Worldwide Exchange.
Great show.
Your awesome show. Between now and the end of the year, I still think that Vertiv is going to do well between now and the end of the year. This is an air pocket. This is an air pocket, and they're selling the entire theme at this point in time. But this is where you kind of go in and you look and you buy on the weakness, especially when you have orders and backlog to the degree that you have in all of the names that I just mentioned, 40, 50, 60% in terms of growth in orders and in backlogs. These numbers I've never seen from an industrial company. But all that being said, the one that I'm buying is not on the industrial list. It's Meta, because that stock is now down 25% from its highs. And I think we are seeing monetization from their AI spend. I know AI spend is a lot, CapEx is much more than we thought, but they are seeing ad impression growth of 14%. They're seeing pricing up 10%. I said yesterday on the show, video time spent up 30%. That is ROI by definition. And so to me, now the stock is trading at 18 times forward estimates, growing revenues at 26%, which I think is sustainable. And I think it's overdone. So that's the one. I added and I bought Microsoft brand new when it dipped on its quarter. And I do think Amazon is absolutely a buy, because on the retail side, they are one of the haves versus the have-nots. It's Walmart, Costco, Amazon. And I don't think Amazon gets credit for their retail business. I know we're talking about AWS for this name. People like to talk about that. They accelerated that growth as well. So that's the one that I am looking to add to. I have not bought it back yet.
If I could, let me just clarify something as it relates to NVIDIA. My feeling that you don't buy NVIDIA here, you wait for a breakout above a new all-time high, it has nothing to do with NVIDIA itself, the equity name. It's the fact that I think the animal spirits have left the market for whatever the reason is that you would like to cite, and I'd like to see those animal spirits return once again. And a breakout above a new all-time high confirms that. Steph is right. If you look at the Mag 7, I think we basically went 7 for 7 with this earnings report. There really was no disappointment in any of these Mag 7 names. So the visibility in terms of strong earnings growth and the guidance towards continuing that into 2026, it's clear, it's there. And owning these Mag 7 names to me, as core holdings, makes sense.
You know, to your point, we're showing the audience right now, only Tesla missed on EPS, and I think a lot of investors don't see that as a story where you're looking at this quarter, you're looking at the outlook with the robots and the robo-taxi, but one miss there, but the rest, a lot of green if you look to the right. So to your point, Brent, I want to come back over to you. Your view on NVIDIA, the move it's making right now, the fact that it's moving lower after this blowout report, if crypto is a factor, if market sentiment is a factor, as Joe's saying, animal spirits leaving the market, how do you view this company right now today?
Yeah, I think from a stock price, we have to separate the company, which is crushing it, from the stock price. What I did actually is I had sold calls 2 months ago at 200 that expire on Friday. So I was able to close those out today with about a 60% gain. And then I sold calls again for January at 220 so 2.5 months from now. I do think this $200 for NVIDIA is a ceiling. If it couldn't break through it today on these stellar numbers, and all that Jensen talked about, his view of depreciation, his view of the partnerships, if it can't be a sustainable rally today, I do think that $200 is going to be a ceiling until, to Joe's points, we get some more animal spirits. And even then, I still think $200 is going to be a tougher spot for it to break through. So I will continue to sell calls and take advantage of that, while I think the stock could trade somewhat sideways.
You know, I think about an hour for the show, we all thought we were doing a way different show about NVIDIA and bullishness on the AI trade and the AI build-out. Great note from Macquarie earlier today saying about 40 to 60% of CapEx for data center, it goes into chips, and still we're seeing chips trade a lot lower. In fact, Joe, one of your holdings, Micron, started the day positive. We're going to show the chart right here, down more than 9%.
Yeah, both Micron and AMD were kind of late to participating in the AI story. They kind of sat out on the sidelines, and there was this rebuilding of positions in both of those names more recent. I think Bryn talked about this the other day, and I agree. I think Micron is probably the better of all the DRAM memory plays that you can think about getting into. But the market right now is in the mood and in the environment of wanting to raise liquidity and remove a leverage that's in the system. And when you have names like AMD and Micron that have, to a certain extent, gone parabolic here over the last 45 days, they are clearly going to be susceptible to more aggressive selling than maybe some of the other semiconductor names that we view as quality, like a Broadcom, like a Lam Research, like a KLA Corp.
Right. One thing that doesn't seem to be a factor here is valuation, because while you were talking, I was just looking at the valuation of Micron. It's only trading at about 12 times forward earnings. So valuation doesn't seem to be the story, Steph. How are people picking the stocks that are going to trade lower today? Because we mentioned, and we were talking about this all throughout the day, Walmart's up about 6.5% for a company that size to make a move. That's incredible. A lot of other names like Broadcom still higher. So when we're looking at these names right now, what do you think investors are looking at to decide which ones to sell, which ones to move higher?
The way I've always looked at it is when a company reports earnings that are good and estimates are going higher and the stocks actually go lower, I don't like that action. Joe is the expert on that. But I don't like that action, but I think it is the opportunity over the long haul, because I do not know when this is going to end. Nobody does. I do not know the price of Bitcoin, where that's going to settle out. Nobody does. But when we do see a stabilization, and it may take a couple of days, couple of weeks, but when we do, people will go back into the companies where the earnings estimates actually went higher, because that is your opportunity. Stocks follow profits over the long haul, on the way up and on the way down. And the ones that are going higher, but yet the stock action isn't good, that doesn't scare me at all. That actually gives me the confidence to be adding to some of those numbers. That's one of the reasons, by the way, that I was adding to Meta and adding to Microsoft, and I'm going to add to Teradyne, because these are great companies that are now getting caught up in all of this noise, and I think that that's the long-term opportunity. So would you count Palo Alto Networks in that same, basket or bucket? You own it, Joe owns it, Bryn, you own the BUG that holds it as well. I mean, Steph, is that in that same basket? The current quarter guidance was a bit weak, but it was a strong report. Oh, it was a very strong report. I think it has nothing to do with the earnings, because they beat and they raised guidance. I think it has to do with the second acquisition that they've done. Chronosphere? Yeah, they did another, right? So I think they've done 2 deals now in a span of like 2 months. And I think that's a lot to handle. That's a lot for any company to handle. While I do think it is very, very bullish for the long haul, platformization is what it is all about. It's offering the most stuff for your customers. And not one company out there, not even CrowdStrike, which is the very best, Palo Alto's number 2, none of them offer 100% of their stuff to their customers. And so you need to make acquisitions. And I've said this many times, there are 4,000 companies in cybersecurity world, private and public. We're going to see massive consolidation. We're already starting to see, I think, the big 5 get bigger and bigger and bigger. And if people don't like this acquisition for the short term, I think they're missing out on the long term and what the needs are for their customers.
Very quick acquisitions, though. CyberArk was, what, $25 billion back in July?
Yeah.
And now this is about a $3.5 billion deal several months later. So the market's kind of looking at that and saying, okay, we don't want you to become a serial acquirer. The core of the business is really strong. And a lot of the bookings have a longer duration, which lends itself well if you want to view this along with CrowdStrike as more of that core cybersecurity holding. I think these two are distinguishing themselves above all else.
No question about it. CEO said last night on the call, 78% of organizations are implementing AI. Only 94% are still, or 94% are still lacking security guardrails. That is a big, big statement. If you don't believe the total addressable market is bigger than AI after those kind of statements, I don't know what will.
Brent, I want to come over to you. As we mentioned, you own the BUG cybersecurity ETF.
Yep.
We're talking about spending on acquisitions with these guys, but I also want to mention the CapEx for Palo Alto was also higher than expected, and we've seen companies be punished for just spending too much money in this quarter and also in other previous quarters.
Well, right. I think it's also partially the market is just weak today. But just to put some context on Bug, which is going to own Fortinet, CrowdStrike, Palo Alto, Zscaler, all of those, we're $1 away from the April lows, like when we had Liberation Day. And so, that just shows you how far, really since November, Bug was like close to 30, 36. It's now about to break 30. And so that's, to me, an opportunity where I'll be looking to add here, because if you're just getting a sell-off back to those April lows, to me, like Steph said, is like these companies, I believe, are secular winners. There's going to be some more than others. But when you're getting this type of drawdown, which I don't think is fundamentally driven, I think it's a very good opportunity for me to add to Bug in a diversified way when I'm hitting, once again, close to the April lows that we saw earlier this year.
While we're talking about lows right now, the NASDAQ actually hit a session low right now, down just about 1%. Also, our data team doing some great work. Bitcoin actually hitting its lowest level since since late April.
Yeah.
Actually, it may have actually gone past that point.
If we could, and allow me a couple of seconds just to talk about this, and I think I had a conversation with Bryn several weeks ago about crypto, and I said I believed our strategy was late to crypto holdings, late to adding Coinbase, and we added strategy as well. And when we added strategy, I literally felt as though I wanted to vomit at that moment. I did not want to have strategy. Strategy is not, it qualifies for the S&P 500, but it's not in there because it has not gotten that approval. There's nothing we could do about that because purely the rules say, okay, based on momentum, you add strategy in, and obviously at the next rebalance, we'll deal with it. But you have to look at what's going on with this stock. And I think if you pull the lens back here, let's go back if we could for 2025. You're talking about a significant decline where leverage exists, right? And as Bitcoin moves lower, I think you want to keep this individual equity name on your screen. By the way, for us, thankfully, we're equally weighted, so it's down to being a nominal position of like 45 basis points. But still, I'm not proud that we own it, and I acknowledge that. But I think it's indicative of the mood of the market, and you have to be willing to change and understand when you see the signals that the mood of the market is changing. It doesn't mean it defeats the overall secular bull market, doesn't mean it defeats the very strong tailwinds that exist, but you just kind of have to understand, okay, it's a moment to step back because risk is coming off, and once we see that to begin to exhaust itself, then we'll step back in and we'll buy some of the more quality names that we like.
Yeah, strategy pulling back more than 6% right now. I want to turn to the other big story today is the return of the jobs report, that delayed September number coming in a lot better than expected, but with higher unemployment. CNBC's senior economics reporter Steve Leisman joins us now on what this could all mean for the Fed. Steve.
Hey, Frank, yeah, the jobs report generally supported the view that the labor market remains in decent shape, or in Fed speak did not suggest additional downside risk to the jobs market. But you're right, there were some cross currents in there. Non-farm payroll at 119, that was against an estimate of 50,000. Unemployment rate ticking up 4.4%. That was actually towards the high side of the rounding. It was about 12 basis points in there. July revised down by 7,000, August by 26,000. So you lost 33 total. And the wages were disinflationary is what I might say about them. 0.2, although the average hourly number 3.8 over year. Not a bad number. I asked Cleveland Fed President Beth Hammack about this tension that we have out there between weak job numbers on the one side and high inflation above target on the other side in an exclusive CNBC interview.
What we hear from the workers is that they're holding on to their jobs for dear life if they have them. We are in this low hiring, low firing environment. But what I also heard at that same roundtable was that the money that they have coming in is just not stretching as far as it used to. That $30, what used to cost $30 now costs $50. And so they really, that inflationary pressure is still very salient for them.
Markets making pretty much a dovish bid on the chance of a rate cut. It's up now, likely because of the jump in the unemployment rate, but it's still a long shot in the absence of additional data. The chance of a cut rising to 36% from 24%. But that, the Wednesday minutes made clear Fed Chair Powell did not have the votes for a December cut, and that the bar may be high. And Frank, I don't know what happened in the last little bit there, but you did take a leg down in stocks. You took a leg down in yields as well, and that's going to play a role, I think, in the outlook for the Fed here. But the market seemed to have kind of lost a bit of steam here, didn't it?
Quite a bit of steam. Actually, the NASDAQ hitting session lows, the S&P down about 0.5%. So understatement is another one of your skills, Steve. I want to go back to what you were hearing from Hammack and just wishing when you're talking to central bank people, they always say they're data dependent. Okay, so you've been kind enough to send out the data reports that we're definitely getting from the government. We get JOLTS on December 9th, and then a few days after they make their decision, we're getting the next jobs report. How can a Fed that's data dependent make a decision to cut or even not, or do anything but pause, I should say, when they know another jobs report is coming up in just a few days, and knowing what we saw in October, biggest layoffs in about 20 years, I believe, since according to Challenger Gray and Christmas, and then we got the Amazon layoffs, UPS layoffs that you and I worked on together. Not knowing that number, how could you cut in December when the next jobs report's coming out in just a few days?
Well, I don't like as a reporter to start a campaign, but I am trying to do a little write-in ballot for the Fed to pause its meeting. I think it ought to wait for that data to come out. I don't see what it costs them to delay it. And the reason, Frank, is because it's important people to understand there's not just one jobs report that's going to come out with that November report. We're also going to get the October, at least the establishment side of the survey. So the Fed will be getting two looks at the jobs report, the October and the November data, as well as the revision. So I think a data-dependent Fed ought to pause and be dependent on the data here, but that's just me. I think it's a good question you ask. They ought to wait for it. Right now, there's a lot of discussion as to how much the job market is weakening. And then, of course, what we're waiting for, Frank, and I'm on the edge of my seat here, is when we get that inflation data. It's supposed to come out on the second day of the Fed meeting, but we don't know if it's coming out. We've not been able to get in touch with the BLS to tell us, are you putting out that inflation report on time for November or not?
Hey, Steve, it's Joe. Good to see you. Fed Governor Lisa Cook has made some comments here about the markets and about valuation, citing in particular stocks, bonds, and private credit. How comfortable can we feel the Federal Reserve is aware of the private credit market, in contact with the conditions in the private credit market? Should we glean some form of comfort that they are on top of that situation, if in fact there is one?
Joe, that's a great question, and I keep asking it. I asked Beth Hammack about it today. I want to know that they're looking at the connection of the private credit market to the banking system. Even the AI funding story, I want to make sure that they're on top of that, and they suggest that they are, that they're looking at it. In general, Joe, as you know, the things that end up blowing up are the things the Fed is not looking at, or that regulators in general are not looking at. There is some weakening going on right now, or some rolling back of bank regulatory capital under the new regime of Michelle Bowman. I'm not saying it's wrong. There are those who are concerned it's adding risk. She thinks she's adding essentially some reasoning or rationale to the to the banking regulations, which were pretty tough in the post-Dodd-Frank era. So that's happening. I think you got to be on your guard, Joe, is all I can tell you, and hope that there's enough equity in front of the debt to soak up the losses before it gets to the debt tranches.
All right, Steve Leisman, thank you very much. And we're back on halftime. Senior markets commentator Mike Santoli joining us with his midday word. Mike, always good to see you. Joe highlighted earlier that crypto was leading the declines in the equity market. I'm looking right now. The Dow, the S&P, and the NASDAQ all at session lows. Your take?
Well, it's absolutely true in terms of what the worry point has been for the market tactically, which is the fact that Bitcoin could not hold a bid. Last night, after NVIDIA reported, and of course, NVIDIA did nothing wrong in all of this. It delivered what it had to deliver. The response is what's more interesting. And in the immediate response to NVIDIA's numbers, Bitcoin ripped, okay? It went back to like 93,000 because everyone assumes everyone owns the same stuff and it was going to be risk on again. And then it bled lower, and we did make new lows. So that at least implies that there are people who have portfolio stress who need to sell some stuff. And I do think that even the morning highs in the S&P 500 I was flagging earlier, sometimes if it's just a reflex oversold bounce after the market's been pulling back, it gets halted by like a 20-day moving average. I mean, it's really short term, but that's exactly where we stopped. And where we're trading right now is basically Tuesday's lows. So the market is trying to test these ranges and see kind of who needs to unload some stuff on rallies, and you have it from there. It's not that much of a fundamental story.
All right, sell some stuff, but we're seeing NVIDIA get sold. Is this an idea that people want to take those profits? Is it also concerns about AI still being a bubble? I mean, this report eased them, but they certainly didn't go away.
What it did is ease the demand cliff concerns, the idea that NVIDIA didn't have visibility through next year. I don't think anyone is doubting that right now. I think people say it's already 8% of the S&P. A lot of people own it. And it wasn't so different than what you would have assumed. So the stock is kind of in one of its plateau periods, I think, right now, and just didn't have enough juice to carry everything else with it. Because if bullish stuff for NVIDIA in terms of the desperation of people spending at those high margins means it's coming out of somebody else's pocket. And I think Microsoft never got a bid this morning. And I think that's the tricky part right now.
So apparently NVIDIA is not the catalyst to restore the animal spirits.
By the way, because I've never thought it was make or break. It just sort of has this spotlight because it's on a January fiscal year. That's why we fixate on it, because it's a month after everybody else reports.
So is there a catalyst out there as we move towards the end of the year that could return the animal spirits, or they just come back on their own?
Yeah, I don't know about come back on their own. I do think the market wants clarity on the interplay of the underlying economic growth and the Fed. I thought that September number today, look, things didn't fall off a cliff in September. Unemployment rate leaks higher. You're going to get a cut, the market believes, by the end of January. It's not that far away. So in theory, the macro could stabilize, or maybe you flush out this positioning, everything looks cleaner, and you got a good scare in the market, and then the seasonal ramp can happen in a delayed way. But we'll see.
Mike Santoli with his midday word. And welcome back to halftime. We are back with a committee move. Steph, you got a new buy.
I do. Natera, it's a healthcare company, women's healthcare company. I've been looking at this stock for about 6 months. I just decided to pull the trigger. Very small position because it certainly has had a nice run, but on any weakness I want to make it a bigger bet. It's women's health and oncology and prenatal testing, transplant rejection. That market's a $50 billion total addressable market. They have 100 ongoing clinical trials going on right now. I think the company can grow revenues in the 20 to 30% range. Their goal is to get gross margins to 70%. They're right now in the 60s. The valuation, it's not cheap. It has had a nice run, but I do like the total addressable market, especially femtech, which is technology and healthcare focused only for women.
That's a really interesting buy, up about 3% right now. So is the idea that once we get some of these issues, like obviously the government shutdowns behind us, some job stabilization, that we're going to see more business just go to healthcare in general and more money flow into the healthcare sector?
I mean, I think we have been seeing healthcare act really well in the last month and a half. So it's entirely possible it can continue. They've lagged for such a long period of time. But I really do like this one particular area within healthcare, focusing on women's issues. And they're doing it really well. Exact Sciences, in the same business, a little more diversified, and they just got bought by Abbott.
I mean, like for men's health, though? Because
Yeah.
they do
They do
Cologuard,
both.
right?
They
Okay,
do
they do
both.
both, yeah.
Yeah.
Interesting. So Natera, those shares up about 3%. All right, we got. And we are back right here on halftime with final trades. Bryn, you're up first.
Google stock continues to perform well in a negative tape. Gemini 3 just rolled out, and Google DeepMind just also rolled out the Nano Banana Pro, which is their great image generator. So I think the stock continues to go higher.
Yeah, one of the green spots in tech. Steph, over to you.
I like Starbucks. I think the turn is happening faster than expected. First positive comp in over 2 years last quarter. I think there's more to go. And I like it a lot, especially with this new CEO.
And Joe, you got the last word.
Healthcare REIT, Welltower, performing remarkably well as rates move lower. I expect REITs to do well.
All right, before we go, one more look at the markets right now. We were hitting session lows earlier. We're still pretty much there right now. NASDAQ down almost 1%. That does it for halftime.
Welcome to Closing Bell. I'm Mike Santoli in for Scott Wapner. This make or break hour begins with this market's resounding reversal. A morning rally built on NVIDIA's encouraging results and guidance was rejected forcefully as a mix of AI skepticism, ambiguous jobs data, and persistent weakness in crypto triggered aggressive selling. Let's take a look at the major indexes here. You see the S&P 500. It was squandered a near 2% morning pop. It is now down 0.8%. It has been down more than 1% on the day. It's been gyrating in this area, essentially around a 5-week low at today's lows. The NASDAQ was up 2.5% at the morning highs. It is now down 1.2%. And the Dow Jones Industrial Average more than 1,000 points below the morning high. At least it was at its lows for the day. It is off just about 0.25% right now. So NVIDIA's earnings and outlook earned wide praise, but the shares could not hold levels in the mid-190s. That's where it popped to after the results this morning. It is now down 1.8%, but also trying to firm up off the lows. Bitcoin, it has remained a key focus as a signal of risk appetites and liquidity. It is now near a 7-month low below $87,000 per coin. We begin the hour with our talk of the tape. What does the market's inability to rally on good news from its biggest company mean, and how might this 3-week pullback go from here? Here to help us answer that is Yardeni Research President Ed Yardeni. Ed, it's great to have you on.
Thank you.
Just give me your observations about what it might tell us about either investor positioning or how hard investors are to please right now with good earnings results.
Well, look, we all know there's been a lot of talk about an AI bubble, and this can be somewhat self-fulfilling. This fellow, Michael Burry, of course, has raised a lot of angst and anxiety about the earnings of particularly NVIDIA and also Palantir. And so, he's got skin in the game now, and he certainly would like to talk these stocks down. But I'm not convinced that this is a bubble that's about to burst. I think it's a bubble that's losing some air, so maybe it won't burst because we're seeing enough people anxious about the situation that it'll take some of the air out of this bubble.
Right, and I guess it's important to remind folks that we can just even set the bubble talk aside and say whether it's becoming a bubble or already has or never will, the market's risk-reward calculus changes every minute, right? I mean, we can talk about downside risks even if you don't think a bubble's bursting. We didn't have a bubble, in 2022 necessarily when the market went down a bunch. I guess the point is the S&P 500 at the lows today has been sitting at this down 5% level from the record highs in October. Still looks pretty routine. I just wonder if you think that there are things that we're going to have to digest from here that might make it a struggle to rebound toward those highs.
Well, I think this issue of AI bubble and how the GPU chips are depreciated and the quality of earnings of some of these tech companies will continue to be challenged. But I look at their revenues, and the revenues, you can't really doctor that, and the revenues kind of speak for themselves. They're absolutely awesome. And so I'm sort of in the camp that believes that this too shall pass, and I remain bullish on the market. Because I think overall earnings are pretty good. I mean, financials certainly have delivered great earnings. Industrials are doing extremely well. And in addition to that, I think communication services are showing some strength. So all in all, I don't see the problem on the earnings side. There is a lot of angst about valuation, and we're taking some of that away, but I don't think it's going to I don't think we're going to correct the valuation issue all that much here.
Yeah, I was going to say, I mean, earnings have done their job. They obviously have been much better than expected, yet the S&P's back where it was before the start of earnings reporting season, really. It's touched levels from September, which is another way of saying market's less expensive than it was a couple months ago. Ed, want to get to one of the other, issues top of mind today, which is the interplay between the jobs data and the Fed. And for that, want to get to Steve Leisman, who can kind of run down what we learned today and where it goes from here. Steve.
Hey, Mike. Yeah, the jobs report generally supported the view held by many at the Fed right now that the labor market remains in decent shape, or in Fed speak did not suggest additional downside risk to the jobs market. Here are the numbers. You came in at 119, which was more than double the expectation. July and August were revised down by a combined 33,000, less than previously reported. The unemployment rate, though, did tick up 11 basis points, 12 basis points there. That might have been a cue for the market, and wages were a little bit muted, up 0.2 and 3.8% year over year. I asked Cleveland Fed President Beth Hammack in an exclusive CNBC interview about the tension between the weak job numbers on the one side and the above target inflation on the other.
It's a bit dated because it comes from September. It does look like it was a mixed report, but it's in line with my expectation that we would see some further softening in the jobs market, which just highlights the difficult time that this is for monetary policy, because we are seeing some signs of softening in the labor market, but we're still seeing elevated signs of inflation.
So markets bid up ever so slightly the chance of a rate cut, likely because of that jump in the unemployment rate. But it's still a long shot bet in the absence of additional data. The chance of a cut rising to 33% from 24% before. You can see there January at around 73%. As it stands now, the Fed will not have another full jobs report before its December meeting. It meets December 9 and 10. The November jobs report, along with half of the October data, the payroll side, scheduled to be released December 16th. So when it comes to a jobs report for the Fed, what they see is what they get. And Mike, I keep searching the news wires for what happened at 10:46 this morning that changed this market sentiment, and I can't find a news item. By then, Beth Hammack was already done by a half an hour, so I don't think it was her, or I don't think it was anything I personally said.
No, I think you're off the hook on that, Steve, although I think it's a good point that it didn't seem as if there was a very definable trigger, although the backdrop of, the Fed in the data seems like there may be a slightly higher chance of a December cut, but it's still not even 50-50. That's kind of the worst of both worlds, right? You're saying things were bad enough to consider you might need it more, but you're probably not going to get it.
Mike, you remember those days when it looked like the market was trading a Fed mistake? Right. Maybe that's something that's going on here. When you read those minutes yesterday, and I personally thought I was out on a limb saying that it didn't look like Powell had a very easy time or had the votes for a December rate cut, and I felt pretty comfortable. I was more on the sturdy part of the limb, reading those minutes yesterday when many said they didn't really want to cut again in December. And it may just be a pause. It may be that they won't want to cut in December, maybe because of the lack of data, maybe because they want to see inflation come back down to target, and that they resume again in January, which way the market is priced. But it could be that the market feels like the Fed is making a mistake here. That's just a trade I don't want to say is happening right now, but one we want to watch.
For sure. Yeah, it's been at least in the back of folks' mind for a little while. Steve, thank you very much. So, Ed, where does that leave us? Right now the market is saying rates are still tilted lower. We maybe get a cut within the next couple of months in January. And I guess the question is whether you think the economy is in need of that.
I don't think the economy really needs it. We haven't had a lot of data recently, but we have certainly had lots of earnings reports, and the third quarter earnings season came out real hot. Instead of earnings being up 6.5%, which was what was expected going into the season, it looks like more like 14-15% on a year-over-year basis. And that's basically the third quarter in a row where earnings expectations have been beat significantly. The other factor here may very well be what's happening in the crypto markets, the sell-off in Bitcoin. A lot of the players in the Bitcoin market are basically risk-on traders, and they may very well own NVIDIA and some of these other high flyers. And when they get queasy about their position in Bitcoin, they may want to take some of their winnings in other parts of their portfolio. So I know that that's part of it. And by the way, the Genius Act in July, I think, is what really put the hammer to Bitcoin. Suddenly, it may not be have a transaction function.
Yeah, well, it's a good point, big picture, but there's no doubt tactically, Bitcoin falling has been, the slinky going down the steps because it brings other things behind it. Ed, thank you very much. I appreciate the time today. All right, we'll talk more right now about today's reversal. Joining me is CNBC contributor, Payne Capital's Courtney Garcia, along with Treasury Partners Richard Saperstein. Good to see you both. So how are you reading it, Courtney, in terms of, short-term market had a bit of a rug pull here with what's gone on with Bitcoin, and then maybe people squinting at NVIDIA's numbers, but it's hard to know what there would have really brought out the selling.
Yeah, and coming into this week, I mean, people are starting to question the AI trade. I mean, there is so much capital expenditures, and people are really questioning when that's going to become profitable. We are also really looking at the valuations of these companies, and there's this whole idea of circular financing, and none of that really went away with NVIDIA's earnings. So while they did have a really good earnings report and show the demand is still there, the question is, can some of these companies, especially the ones who aren't public yet and aren't profitable yet, when is that going to happen? I think that question hasn't fully been answered yet. But I do think a bigger part of this picture is just some of the other things that are happening in the markets today. So Bitcoin being down is very correlated with the overall markets being down. That is part of your risk on trade. And also you had some Fed speak today where they were coming out and saying they see downside risk to the markets as well. I think you just had a combination of those things and people are just taking their profits. Yeah, a little bit of Fed speak around this sort of financial stability discussion. Yeah. But I mean, it seemed a little bit like not alarmed, but definitely watchful of some of those issues. Yeah. Rich, I mean, you see this skepticism seeping into the AI trade, or at least the market trying to sort relative winners and losers. How does it leave you treating it, the tech trade?
So look, the AI anxiety is continuing. That was caused by, obviously, the circular financing, the leverage with Oracle, the questioning depreciation schedule, and the stretch valuations, none of which concern us. Because what we're looking at is companies that have had outstanding Q3 results. The market will continue to move them lower until a point where operating cash flows become very attractive. And we're actually very close to that right now. Specifically, if you take the three hyperscalers, Amazon, Google, and Microsoft, the operating cash flow as a percentage of the market cap is now roughly equivalent to the 493 stocks, the non-FANGs in the market. So we can talk about Bitcoin affecting the large cap tech stocks, but you can't argue with the growth in the hyperscalers last quarter and their operating cash flows right now, which will ultimately set a floor on these stocks.
Although the operating cash flows have never been the question. It's what they're doing with the cash flows, right? So the free cash flows is what's been going down because they are investing so heavily.
So if I'm the CFO of Microsoft or Google, and I've got $180 billion in operating cash flow for next year, I'm going to invest $110 billion back into CapEx. What are my choices with it? I return it to shareholders, I put it on my balance sheet, 4% risk-free, or I reinvest it. Okay, they're reinvesting it, and look what happened year over year. We had 39% growth in Microsoft's earnings, 34% in Google, and 20% in Amazon. So the decision to reinvest these large amounts is scaring everyone, yet we're seeing huge increases in the growth of the earnings and the operating cash flows.
Courtney, bigger picture, too, coming into this week, I think, you passed the 3-year anniversary of this bull market. You arguably could have clients coming to you and say, look, we've compounded at 20+% annually for the last 3 years. Have we kind of already pulled forward some of these results, or where are the opportunities outside of what's already been working in the last 3 years? Is that a discussion you might have?
It absolutely is. And actually, I wish more clients would come to me with that. I think more people are wanting to get into the AI trade still and wanting to get into the things that are doing the best. But I do think that is prudent to do as an investor right now, is most of the returns that have happened since the bull market started in October of 22 are from the AI trade. And so I think at some point looking to take some of your profits there and adding to some of these other sectors of the market is a very good thing to do, because though I don't think this is the bubble bursting, I think there's a lot of other areas of opportunities that are not as expensive as the AI trade. And when you're seeing these big pullbacks and these big drawdowns on days like these, that's not necessarily happening across the board. I think it is, just as an investor, it's a good time to look at that. I think seeing people doing so is probably more of a reason why this isn't the top of a bubble, because people are pretty skittish. They are looking to take profits on days like today.
And Rich, if you're not concerned big picture about kind of the financial condition of these tech companies, which of course is pretty bulletproof up to this point, what are you doing tactically with your clients? I mean, have you taken profits in those areas? Are you looking to park cash? How does it feel going into the end of the year?
Well, we would begin with the end in sight. So we'll target a rate of return with each individual client. Let's call it 7%. And with that, we'll build an asset allocation. Now, as Courtney mentioned, we've had years of growth on the equity side, which means that we've got to continually pare back the exposure to equities. It just so happened that no one loves municipal bonds anymore. And munis, and listeners have known, I've been a big proponent of munis over the last year, where we're getting 4.5%, 4.75% tax-free in munis. So what we've been doing is tactically reducing equity, which has been growing enormously, and reinvesting into the safe side of the asset allocation, which if we're getting 4.5% tax-free, that takes us a long way towards the end in sight, which is 7% for that particular client. So we're adjusting asset allocations, we're maintaining our technology overweight, along with some other sectors, and we're adding municipal bonds. We have added quite a bit.
Okay. And, finally, Courtney, if you're hoping clients look to other areas, I mean, is a 5% pullback in the S&P enough to kind of shake loose a lot of value in those other areas and feel like, this is a decent entry point?
I do, and we've been doing the same thing here. It's just people are getting very overexposed to these categories, so we've been actively taking those profits there. I think, is it going to be enough to trigger like the larger masses to be taking their profits? I don't know. I mean, I think we're still seeing that FOMO trade, and people just want to be in there. But I think that's absolutely what you want to be looking at. And when you're looking at the broader economy, I mean, GDP is on track to be growing 4% for the third quarter. You're seeing a really good earnings season. You're seeing things like Walmart came out, and they're actually showing that the consumer is actually still holding up. Yeah. So even though we're not getting this government data, I think the general economy still looks good. You just don't want to be over-concentrated to check, though I definitely want to own it. Make sure you take a look at that right now.
Yeah, there is a bit of a mixed signals here, because some people think we have the makings of a reaccelerating economy in the first quarter, but right now we're focused on kind of the soft spots. So we'll see how that gets resolved, if it does. Courtney, Rich, thanks very much.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. Wow, what a day today. Very a special day. A game-changing day, possibly. The market declined quite a bit, as you can see here in the indices, right? It is currently Thursday, November 20th, 4:32 p.m. as I'm recording this video. We're going to get into these in a second. I just want to give you guys a brief overview here. The stocks tumble. NASDAQ closes 2% lower after a stunning reversal in AI NVIDIA stocks. All right. And in this video, guys, here's what we're going to do. We're going to cover, we just saw Tom Lee. We saw, by the way, I took some clips from different shows so we can get an overall perspective. And I'm going to be covering the majority of the stocks that they talked about. Okay. We're going to, of course, take a look at the index ETFs. We're going to look at, again, some of the stocks that they talked about on the show, about 18 ETFs and stocks that are all mixed up in there. Here's what else we're going to talk about. We're going to talk about Google, Tesla, Apple, Meta, Microsoft, and Amazon. All right. We're going to look at the sectors. And, look at the red, okay? It's not looking too good here today. Not looking too good. But you know what? It's times like this. It's like days like this where we have to sort of look at our portfolios, reassess the situation, and start playing defense. All right. And so that's the key thing. It's not a time for panic. It's a time to just, okay, what are we going to do? How are we going to protect our portfolios and come out of this, in a relatively good way, right? So anyway, so we're going to cover all those, and we're going to use this indicator here today. It's called the Ichimoku indicator. Here's the S&P 500. You can see the big red bar here. Which of course is not a good sign, because that's a bearish engulfing pattern that you're seeing here with the S&P 500. Okay. The good news is we're using this indicator Ichimoku, and that helps to define where we might find support, which is the bottom of the cloud in this case. But a lot of the things are starting to fall apart a little, as I've mentioned before, and I'll talk about that right here, right now. For example, all right, now the indicator itself, if we look at the weekly chart, by the way, this is just the daily, okay, but let's look at the weekly for a moment. It looks like there's a high probability now that the S&P 500 for the first week since, let's go back in time. Since, ready? April 25th of 2025, we have now gotten under, we've gotten under, actually it was, April 25th was when it was under the cloud, where we got basically, and it was on May 2nd that we got above the cloud, above all the moving averages. So it's this week here, the week ending November 21st, where this is the beginning potentially of a pullback. Now, I don't know how long that pullback is going to be. It could come right down to the next level of support with a weekly chart, for example, and that's going to be another maybe 2.6% away from where we currently are. So we might see that, and then we might get a bounce. That's all. That's what I can tell you from looking at the weekly chart. But the daily chart is a little broken here. Why is it broken? We've got a lower high from the prior one. Okay, so do you see that decline right there? And we took out this low here. So it was kind of holding up a little bit. It was holding up with this reversal candle here and another reversal candle, and now we've got this long red candle that is engulfing the prior one, and it stalled around the bottom of the cloud. All right, so we'll get into all of these in a few moments. Now, if we look at, let's go back for a moment. Let's go back to the screener here. I just want to show you guys what happened today. So yeah, initially the market gapped up after, of course, the positive news that we had yesterday with NVIDIA, right? And it didn't take long, and it started to drop. And you can see here that happened around 11 a.m. or so, where the price dropped. It happened in all the index ETFs, okay? And so the Dow was down 0.84%, the NASDAQ down 2.15%, S&P 500 down 1.56%, and the Russell 2000 is down 1.85%. 73.3% of the stocks were declining, okay? There are now 80.5% that are experiencing new lows. There's about 73.5% under the 50-day moving average, and there's about 57.8% under the 200-day. Let's look at the heat map for a moment, just so you can get a bigger picture of the S&P 500, the stocks within it. You don't really see a whole lot of green here, except for Walmart was up 6.46%. Some of the biotechs right there did well. Johnson & Johnson was up 0.28. UNH was up 0.79. Utilities mixed, okay? But look at the technology stocks. They took a big, a big hit. IBM was up 0.65% though. Insurance companies, they did okay. And so, yeah, let's take you know what? I'd like to check out the ETFs as well real quick. So here are the ETFs that you can see how they performed. And, gold just down 0.03%. Oil's down 1.03. Let's look at the groups. The groups show us the sectors and which ones were strong today. Well, it makes sense that the consumer defensive stock did pretty well. It was the only sector that was up 1.27%. Technology down 2.79%. How about for the week, though? What does it all look like for the week? It's all down for the week, okay? Consumer defensives down the least, 0.16%. Consumer cyclical down the most, 5.54%. If you look at the 1 month performance, healthcare and energy both positive for the month. But this week, even healthcare and energy down. All right, so this was a big change in pretty much we might potentially see a sector rotation into the consumer defensives, and of course I'll be keeping an eye on that, and of course I will keep you guys up to date. And one other thing I wanted to mention is, like, every weekend, folks, I go over my entire portfolio. And this is the last members only video that I did, for the weekend, the last week. And it's like a 1 hour, 11-minute video. I'll be doing another one of those. You can see every week I basically post one of these videos, and I go over stocks and ETFs that you might not see, for example, on the daily free show. So if you want to become a member, very easy to do it. All you need to do is click the link at the top here, join, or this little join button, which is different than subscribing. If you subscribe, of course, I'll pop up in your subscriptions. You can hit the notification bell, so the second that my video is up, you'll be able to actually access it. This is time-sensitive stuff. I think it's important. So that's in this case, the notification bell makes sense. And then hit the join button if you want to get extra content. Okay, Now you will get that under the Blue Cloud Trader. There are 3 tiers here. You get it under the Blue Cloud Trader. You'll get those videos that I'm talking about. If you want even more information, Blue Cloud Legend. This is where you get those exclusive member-only videos. There are some day trading videos that I've recorded, so you can see how I've day traded in the past. Daily trade updates is the key thing here. So what I do is I post my trades every single day. So there's a record of my entries, my what stocks I've added, what stocks I've closed out of each day. Under the posts, there'll be a new tab that pops up called membership. That's where you'll find it. All right. And if you just want to, just support this channel for what I do, I really appreciate you. You can become a Blue Cloud supporter. Hit the join button and support this channel. Thank you so much. We are, we're almost at 26,000. We're 25,400 subscribers right now. Okay, guys, let's get into. Now we're going to get into the charts, and this is my favorite part. Okay, so S&P 500. We just talked about that one. Okay, you can see where it's at right now. Where might it next find support? Well, certainly this low right here has been taken out. It looks like it closed under. Did it? Let's find out for sure. That low right there was 652.84, and yeah, you can see we closed at 652.53. So we took out that low as well. Not just this low, but this one as well. Yeah, but we do have support at the cloud itself. What about the Qs? The QQQ ETF, similar situation here. You can see that, this is the prior level. I had 583.32 based on that prior high there. It looks like it came just barely under the cloud. So we really need to have a reversal here tomorrow. We need to see some buying. Maybe there'll be a change tomorrow. You never know. This market is very volatile. It's up and down every day, And so we'll see what happens there. The Dow Jones also entered into the cloud. All right, we've got a bearish engulfing pattern between these 2 candles. And so, this one has not, it took out this low right here. That happened on Tuesday of this week. But we also have a low right there around 455. And so we'll watch that. The Russell 2000, okay, like I've said before, is probably the weakest of the bunch. Currently, it is obviously in a decline here, and it's you can see the how it's the rate of change is increasing to the downside here, with higher volume as well. ADX is moving up. That means that the momentum is increasing to the downside. It closed under the cloud on the daily. Now, what does it look like on the weekly chart? All right, it's basically stopped at the Kijun-sen, the 26 period. Now, remember, if you're not familiar with this indicator, let me get rid of these lines and just explain it to you very quickly for those of you who are new. It's comprised of 5 lines. The Senkou span A, which is derived by taking the midpoint of these 2 moving averages and projecting it 26 periods into the future. The Senkou span B, which is the other part of the cloud, which is basically derived by taking the midpoint of the last 52 periods, but instead of projecting it under the candle, it's projected 26 periods into the future. You've got the Tenkan-sen, okay, the green line, which is the midpoint, not the closing price, but the midpoint of the last 9 periods. So it's a really, really good average. And then the Kijun-sen, the red line, is the midpoint of the last 26 periods. So it's a slower moving average. And then finally, you've got your Chikou span, the white line, which is actually today's closing price. Well, in this case, it's a week, right? So it's whatever today is projected 26 periods ago. So 26 weeks in this case. And so that's where you'll find that. We want to see if that white line is still above the candles 26 periods ago. We're still in a bullish, things are still, this is one of the few things that are bullish. We need all the elements to be bullish, of course, but it's one of the 5 that's bullish. We want the Senkou span A above the Senkou span B. We've got that. So we've got a check mark on those 3 things. We've got the Tenkan-sen, the faster moving average above the slower one. That's also positive. The only negative thing here is, as you can see, for 3 weeks now, 3 weeks in a row, the Russell 2000 has been declining. Okay, 1, 2, 3, under the moving average there. It's now stalling at the next level of support. How will it react? We'll find out tomorrow, I guess, right? The VIX. Let's look at the VIX. Here's the VIX. It spiked 11.67%. This represents volatility. It represents fear. in the markets and concern. The cloud has turned bullish here. That's not good for the VIX. The Tenkan-sen and Kijun-sen, let's see that. Yeah, it looks like the conversion line or Tenkan-sen is above the Kijun-sen. So that's not good either. If this thing continues, we could have a similar situation like we did back in April where we had that big drop, okay? The last time that we were at these levels was like back here. You could see that level right there from March, and then once we got above it, boom, it took off. So this thing needs to kind of stall soon. It needs to maybe even stall around this area here. If it breaks above that, I think we're going to see the market really drop significantly more, potentially. And there are ways to protect yourself in this market where you don't have to sell off your entire portfolio. You can hedge your account. That's one of the things I talk about. That's one of the things I'm doing right now. And if you want to learn about that, you can become a member, okay, and watch those videos. FEZ, Euro stocks. This one also declined. This one closed under the Ichimoku cloud. So the Euro stocks 50 on the daily chart is also looking a little bit bearish here. Obviously, it took out these lows. You know, not good. Higher volume. ADX is moving up. On the weekly chart, if, you know, Fridays, and this candle here, remember, this is a weekly candle that we're looking at, or weekly chart we're looking at. It needs to close above the Kijun in the 26 period. Right now, it's under it. But there's 1 day left, right? It's Thursday today. Friday, by closing time around 3:30 p.m. to 4 p.m., we'll have a sense of exactly where this is going to be. And then, you know, if it stays above the Kijun, then maybe potentially we could get a rally on Monday. But I'm just saying, like, this generally tends to be the 26 period moving average tends to be a place where prices stall. So, or the bottom of the cloud, like you can see right here. Okay, you can see how found support right there. We're looking for reasons to hold stocks and ETFs and whatnot. All right, now let's get into the rest of the stocks. They talked about, you know, more than the number of stocks that you see right here, but we're going to go into these stocks. Just one, and it was actually Stephanie Link that recommended this one. And I'm actually quite surprised because she tends to like to buy stocks from what I've seen in the past, or recommend stocks that are typically in a huge downfall, and because she makes the assessment that they're cheap. Well, in this case, she's not buying a cheap stock. I mean, the price of sales here is 10.43, as you can see right there. But it aligns more with my strategy, which is, and I'm a breakout trader. So what I'm essentially looking for is stocks that are breaking through levels, okay, sometimes through consolidation levels like you see right here. And so, as you can see, we're looking at a weekly chart now for approximately 5 weeks now. This stock is taking off, and it's doing pretty good. I like what I'm seeing here on the weekly chart with this one. Yes, the profit margins are negative 14.6%. However, and I typically don't buy stocks that are where profit margins are negative, but I did do a little research just for you guys and for myself, because I think I will be considering adding this to my portfolio soon. So here's the note here that I wrote down earlier from some of the research that I did. Let's see if I can, oh, okay. Right click, guys, by the way, for those of you who are using TC2000, okay, at the very, very top, there's a way to click new, and you can create a note, and then you can actually, visually see that note. And then once you've got that note under the candle, for example, you can right click it, click view note. You can edit event markers, remove the note markers. Anyway, let's read that note that I created from earlier today. So let me just magnify this and make it a little bigger. Okay, there we go. There we go. All right. Why profit margins are negative for Natera, okay? Negative because the company operates in high growth pre-profit phase characterized by heavy investing in operating expenses. You know, the negative margins are not due to poor cost of goods, which is evident by the high gross margin, but rather what happens after gross profit. So what they're doing is massive investment in research, development, expanding applications. They developed its core test like Signature for new cancer types and use cases, colorectal cancer, etc. Secure reimbursement, conduct clinical trials and studies necessary to gain positive coverage decisions from regulators. Let's see. aggressive selling, general and administrative expenses to rapidly increase market share and test volume. Natera invests heavily in its sales and marketing infrastructure, scaling the sales force, building out large direct sales teams to educate physicians and hospitals on its complex, specialized tests across women's health, oncology, and organ transplant. Market penetration, launching marketing campaigns to drive patient and physician awareness. And in a recent quarter, while the company generated hundreds of millions in gross profit, the combined spending on R&D and SG&A far exceeded the profit, resulting in an overall net loss and a negative operating margin. In summary, Natera is intentionally choosing to forgo current net profit to maximize future revenue growth and establish market leadership in disruptive diagnostic technologies. So that's the kind of thing that I like to see in a company. If they're putting their money to use for future growth, okay, I'm gonna, in a situation like that, I'm going to discard the fact that they are still not profitable. Okay, look at the sales growth here. 38.8%. They have positive operating cash flow, 194.3 mil. But yeah, it's a little bit overpriced, but I think that it makes sense because of the growth of this company. All right, so that's the weekly chart. Here's the daily chart, still looking pretty bullish. Volume on a day like this, when you see a stock that's moving up on a down day, that should give you a little bit of a signal as well that, hey, maybe this is something to consider. Okay, it's on these types of days, on these specific days when the market is dropping and you see a specific stock going up instead of going down like the rest, you got to pay closer attention to those stocks because they have the higher possibility and probability of going up. And this is in fact a stock pickers market, as I've said before. All right, just buying the index is not going to work out that great in this scenario, in this environment. That's why I'm buying individual stocks right now, and I'm focusing on the ones that are strong, that are leading, that are doing well, and basically not overexposing myself either by buying too many. All right, I'm kind of like hunkering down a little bit. I'm in hunker down zone right now. So all right, anyway, let's keep going here. So NTRA, I like it. Okay, AMD, no. You can see that it's declining, and on the weekly chart, it closed. Well, it hasn't closed yet, but it's going to find some support here. It should find some support. We'll see if it can turn up. But the ADX is moving up, so I'd stay out of that one right now. I wouldn't be adding positions here. This is where you have to manage your trade if you have a position here, and so now you know where your next support levels are. Okay. AVGO. By the way, if you like the software that I'm using, it's called TC2000. I strongly recommend, especially in this environment, that you guys consider getting this software. And and it's really, you can even try it for 30 days for free. So why not? Basically, come to my page here, click on 9 more links, scroll down. There it is. There's the link for 20, and you'll get that $25 coupon. You click on this link here. Okay. You add your email. You download the software. And then the pricing information is right here. And as you can see, if you do the monthly, for example, it's $24.99 for the basic. So maybe try out with the basic. I strongly recommend the premium. If you want to be able to draw on the charts, create alerts and all that sort of stuff, you can see all the other benefits right there. Okay, let's get back now. BMNR, Bitmine Immersion Technologies. Obviously, this is the, this is Tom Lee's. Did I have any notes on this? I do have some notes on that. Yeah, give me a second, folks. Let me pop that up. There it is. Tom Lee was appointed chairman of Bitmine Immersion Technologies on June 30th, pivoted to focus building an Ethereum-centric treasury, aiming, to become the MicroStrategy of Ethereum. Well, this is, you guys want to see what's going on with MSTR right now. I mean, they were doing great before, but this is MicroStrategy. We'll get to that in a second. I wouldn't be wanting to follow that right now at this particular moment, but as you can see, it's down 10.83%. So yeah, I mean, these ETFs are not doing so great. Obviously, this is a stock actually, but the Bitcoin, as you'll see in a few moments, in a downfall right now currently. That's the daily. There's the weekly. I'd stay out of that for now. I wouldn't be adding positions basically. Here's the weekly chart. Cybersecurity also dropping. You'd think in this environment they might need a little extra cybersecurity especially after what Tom Lee talked about in the show. You can see that it broke through that low right there. So we've got a lower low, and now we have lower high here, okay, from the prior one. And we took out the prior low, and we also closed, not yet, actually, because it's a weekly chart. But tomorrow, if it stays under the cloud, that's going to be a problem. It's looking like it's heading that way. On the daily chart, this is what it looks like. It's pretty broken down. Coinbase is also broken down. I'd stay out of that one. ETH is Ethereum. Okay, the ETH ETF is for the Ethereum mini trust. That's also under the 200-day. I'd stay out of that one. ETN is also down. Eaton Corporation. GEV is under the cloud. I'd stay out of this one. GRNY, this is Tom Lee's large cap ETF. As you can see, it's re-entered the box here where it was consolidating for a long time. You know, is this the end of our nice strong trend finally? I don't know. So that's GRNY down 2.81%. That's the daily chart. Here's the weekly, stalling at the Kijinsen. So this is what I'm talking about. If you start looking at the higher time frame, we've got some support here. This thing could potentially bounce here, but I want to see the evidence first, and I'm not ready to jump in just because it's at that level. I need to see quick pop-up, basically. Bitcoin also continuing to drop. IBIT is the ETF there. MSTR, we just talked about that one. Since the highs up here of 458, it's dropped 61.34%. MU Micron, I got lucky by getting out here. I did get a 19.1% profit on that one. It's declined. It moved up slightly more since that, but then it dropped, as you can see here with that shooting star candle. PANW, Palo Alto Network, also dropping. This was one of Jason Snipes' final trades back on November 6th. That was around this point right here. So he was right at that point. At least it moved up about, I don't know, 4 or 5% before you see this big decline right now. This is why we use technical analysis, folks, so you can identify where the weak place, where it's weak and where it's strong. When you're above the cloud, when you're above the moving averages, you're in a good place. When you're not, okay, stay out of the market. Put your money in cash for a little bit. Trying to help people not lose too much in the potential. I'm not saying this is going to all fall apart here, but it's not looking pretty. Okay, Quanta Services going sideways. So this one's holding up kind of, but it's under the moving averages. So on the weekly chart, we are still above the Tenkan and Kijinsen. So PWR is not a terrible looking one stock, but it's consolidating here, and it did drop 3.52%. Starbucks, it hasn't been looking good for a long time. I'd stay out of this one too. It's currently it looks like it closed under the cloud right there. There's a daily chart and here's a weekly. Not looking good. What about VRT? Vertiv Holdings entered the cloud. We had a negative crossover. The Tenkan under the Kijinsen, and the Chiku span is currently under the price. So I'd stay out of that one, folks. What about Walmart? Walmart had a big jump after the earnings announcement this week, right? So it gapped up, and it's looking pretty good. It's looking pretty good. The only thing is it doesn't get a blue flag because the moving averages are not aligned perfectly. The Tenkan is under the Kijinsen still. If you look at the closing price, right here, the Chiku span, like I said before, you want that white line above. It's just an extra level of confirmation so that you know that you, and then, by the way, the cloud is also bearish. When you see the Senkou span A cross under the Senkou span B. So, yeah, we had this big jump, and yeah, it could potentially continue moving up, but it could also, this little wick that you see the top there, that represents some selling that took place at the end of the day. That wick that you see right there, it represents selling. If it was a flat surface at the top, okay, like this candle right here, perfect example. If it was like that type of candle, I would be a lot more apt to get into this. But because of the fact that there was some selling from that wick, the wick represents the high of the day, and then the body of the candle represents where price closed at 4 p.m. And all I need to do is switch it to a shorter time frame so you can see that. Let's go to a 5-minute. So you can see here in the last 5 minutes or so, I'm on this from around 3:20 p.m. It basically declined about 0.67% from that point, or 0.7%. Okay. Overall, I mean, it's good, but you also want to see when a stock is taking off, you do want it to continue moving up. You don't want to see it consolidating the majority of the day. Yeah, price gapped up after earnings. It moved up a little bit more, but then what did it do? It started stalling at this area here. All right. Next, let's go to the Mag 7s. Let's look at Google. All right. So Google. Now, I don't have a position in this anymore, but I'll just talk about what's going on with it. It did create a shooting star here. The 292.01 level is based on the high from that candle from October 30th. Okay. That's the last time I had a position in Google. Not true. I did take another position and closed out. It was almost a flat trade type situation in between here. But the price gapped up after the earnings announcement yesterday, right? So we saw all the stocks in that video that I posted yesterday moving up after hours. I said, there's a high probability, guys, that this thing is going to take off now. And guess what? It did. It gapped up higher and then spent the rest of the day dropping. Okay. And then what happened here? Google still stayed. The good news is Google, okay, notice it has a blue flag. It's because price remained above the Tenkan-sen, remained above the Kijun-sen, even though it dropped back under the 292.01. It's above the cloud. Berkshire Hathaway is putting money into Google right now, right? He's got a big investment in Google recently, we found out. On the weekly chart, it's still above the moving averages and the cloud. The cloud is still bullish. The future cloud is still bullish. I like Google, but I don't feel like I'm very confident about getting into it quite yet. I want to see a little more strength, basically, That's the way I'm looking at it. Tesla, I'd stay out of this one. It's inside the cloud. You don't want to be buying stocks when they're under the moving averages or in the cloud. Apple, also under the moving averages now here for about 4 days on the daily chart. And here's the weekly. Still holding up above the cloud and moving averages on the weekly. It looks pretty strong, but again, it's stalling. Okay. Meta, look at this. A continuation to the downside. I'd stay out of that one, obviously. You get that decline right there. And remember, the momentum can start increasing. So like right there, you can see the price was moving basically, it was moving slightly in the angle of that decline was not that bad. But then the decline, the angle started to accelerate to the downside right there. And now you can see how far down it's gone. And so you can get some insights from these declines if they start to increase in the actual percentage of decline. If it drops further, then there's a continuation to the downside. Now, I don't know. If we look at the weekly chart on this one, okay. So it closed. Well, it has not closed. Remember, Friday we'll know what this looks like. It needs to get back above that cloud right there, basically. Okay. What else? Microsoft still in a decline, down 1.78% under the cloud. No on that one. Amazon under the cloud. Might find some support at the 200, but I wouldn't be jumping in again until all the elements of Ichimoku are giving me a buy signal. Why? Because I just want to be on the right side of the trade. As long as everything is, when you're jumping the gun, you're really taking a chance. And I've learned the hard way by assuming that I knew better than the strategy that I utilize. The strategy tends to be better as far as identifying the right times to get in and get out, generally speaking, okay? Now, the sectors, guys, it's all in the red, but there are two that look pretty good. XBI, biotech is still holding up above the Tenkan-sen Kijun-sen on both the daily and the weekly chart, okay? But it was down 0.59. And healthcare, XLV, here it is on the weekly chart. We still have a bullish cloud here. Prices above the moving averages, and on the daily chart, same thing, just consolidating right now. Okay, so I'm not like ultra bearish on these two sectors. Okay. Now, the rest are looking a little bit beaten up. I'm just going to show you what they look like. GDXJ, okay, junior gold miners, oil K. All right, copper, no on XLC. Bitcoin, there's Bitcoin still dropping. SMH entering the cloud, that's the semiconductor ETF. Gold, still, it doesn't look terrible here. It did find that, I mean, it's only down 0.03%, but I still wouldn't be jumping in quite yet. XHB, home builders, obviously still declining here. Real estate getting under the box right there that I had built. Actually, I take that back. That box is not correct. Let me fix it a little bit right there. Okay. Yeah, there's the wick. And right there too. Look, okay, so it looks like it's still within it, but I'd stay out of that one. Consumer discretionary might find some support, but I'd stay out of that. Utilities also inside the cloud right now. Chico span is under price. You can see that how the Chico span gives us a little bit of a warning, doesn't it? So when did it give us the warning? When price got under this candle. When would we have seen this? We would have seen it. Let me go forward 26 periods, okay? Right around this. Whoops. We would have seen it probably around, it looks like there's one day that skipped, probably was a weekend or something like that. So I'm going to just say the 27 right here. This is where you would have got the warning sign right there about the Chico span. Of course, you get the warning much faster under the Tankinson, okay, right there on October 17th. And since that point right there, it's actually dropped 3.77%. XLP, utilities still, I'm sorry, consumer staples still dropping, but it was the one ETF here that was up today, 0.72%. I'd still stay out of this because it's in an embedded decline. It might be a short-lived little situation here. XLK, technology, not looking good here. It closed today on the daily chart under the cloud. Now, what does it look like on the weekly? Right above the Kijins in the 26 period. So we've got some support. It's got to hold up. We'll see what happens. Industrials, not looking good. Okay, here's the weekly under the Kijinsen on the daily chart. Looks more bearish. Financials look bearish. Look at the financials. They started showing some strength here when they popped above this trend line that I drew. That was on, what day was that? Let's find out. Whoops. That was on November 11th. Moved up slightly. Stalled. Where did it stall? Right at the top of the cloud. So if price is coming from under the cloud, it's going to find resistance at the cloud itself. And then you can see how it dropped. When it's under the cloud, it's going to find, okay, resistance under the bottom part of the cloud as well. So, yeah, not good, guys. And it will always typically find support when price is above. So here, price was above the cloud. You can see it came down, found support here, right? Moved up, came back down to the cloud, and moving averages bounced off that level. But then once you break into it, okay, things start to get a little bit hairy. Energy. Let's look at the weekly chart first. So on the weekly chart, I drew this trend line for XLE. Now that you can see it's in the decline. Now price is still above the Tankinson Kijinsen, and the cloud is still bullish here, and Chico span is above the candles. So on the weekly chart, we do have Ichimoku giving us, telling us, hey, this thing is still strong overall. All right, and typically, even in like really bad markets, energy does tend to do okay because it's a defensive place to be, but it's kind of getting squeezed in from this trend line that I'm seeing here, XLE at least, and the 200-day that's moving upwards, okay? It's almost like a symmetrical triangle. In fact, let me do this. Let me just draw another. Yeah, you can see that. Okay, so it's kind of like coiling up in here, and where's it going to go? We're going to find out together soon enough. Silver, all right, down 1.44%. Has not been able to break back above that 49.25 level, but it's holding up on the weekly chart. On the daily chart, you can see it basically is under Tankinson. That's why I took away the blue flag. But it's, not looking terrible either. XLB materials, on the other hand, I'd stay out of that ETF right there, the XLB. And guess what? So some of my members asked me to talk about some of the stocks that are in the portfolio. Just a quick reminder, I do not talk about those stocks generally, okay, during the free videos that I do during the week. So I will be covering those. Don't worry. They will be covered this weekend when I go over the entire portfolio, and I'll talk about why I added, why I closed out of positions, that sort of thing. I did add one stock today in the portfolio, and I also hedged my portfolio today, and I closed out of a number of profitable positions. So anyway, and you can find out about those stocks again by going to my page here, clicking the join button. All right, selecting Blue Cloud Trader. I'm sorry. No, to see the daily trades, you have to become a Blue Cloud Legend level member. Hit the join button and then go from there. Okay, guys? Thanks a lot. Thanks for watching. I appreciate all of you. Hit the like, subscribe. Hit the like and subscribe button, and maybe share this video with someone if you're liking it. They might like it too. You never know. All right, guys. Have a good night.